Tech's restructure is scuttled and copper catches a cold. You're listening to Kitco Roundtable. I'm your host, Michael McCrae. Paul Harris is here. How you doing, Paul?
Hey, Michael. Good afternoon.
And with us is William Adams. He's head of battery metal research at Fastmarkets. Welcome to Kitco, William.
Yeah, thank you very much for having me.
William, there's so much to talk about in the lithium space due to the fallout from Chile from last week. There's also been some ugly quarters that have started to drop. Before we start, though, what would be the one mine site or production site you wish all battery metal investors could see?
Well, that's a difficult question. I think because it's lithium, you really need to go to two, probably. You need to go and see a brine operation. So I'd go to one of the Atacamas, either Albemarle or SQM. And I think on the hard rock as well, which is, the other source of lithium, I think you could do, I'd recommend going to Pilbara Minerals. Not that I've ever been there myself, unfortunately, not yet at least. But I think it's had a really good sort of startup over the last 5 years or so. And I think it's a real model.
Let's turn to macro. Two economics report released Friday support a hawkish stance by the Federal Reserve, meaning that interest rates may be kept higher for longer. Both PCE core price index and employment cost index came in above expectations. Precious metals didn't move much. As of noon Eastern time, gold was in the low 1990s and silver at 24.90. The markets didn't move much, with the S&P flat for the week. Base metals have trended lower, though, on worries that global economies are slowing. WTI crude is near 75 a barrel, that despite Saudi Arabia and other major oil producers announcing surprise cuts earlier this month. Copper is headed for a monthly loss. Last checked, copper was in the 380s. It started the month above $4. Graphite miner Sierra Resources made the point regarding slower economic growth, specifically China. The miner described the Chinese EV market as, quote, volatile, noting a sharp drop in EV sales growth. The graphite miner plans to move forward planned maintenance for its mine until demand conditions and sales economic orders warrant higher capacity utilization. Paul, the Teck and Glencore saga continues.
Oh, yes, Michael. Teck Resources backed off this week from the proposed split of its base metals and coal businesses into Teck Metals and Elk Valley Resources, an idea that's been criticized for the transitional capital structure, which would have seen Teck Metals continue to receive the lion's share of the coal business profits for a number of years. Teck said it will now rethink a more direct approach to separation, according to CEO Jonathan Price. Glencore, which made an unsolicited $23 billion hostile bid for the Canadian company, said it is still interested as and when Teck decides what it wants to do. Also in Canada this week, Nighthawk Gold reported a preliminary economic assessment for gold mining operations at its Colomac project near Yellowknife in the Northwest Territories, outlining average annual production of 290,000 ounces a year at an $828 per ounce all-in sustaining cost over a 12.2-year mine life. The project would yield a very attractive internal rate of return after tax of 35% at a $1,600 per ounce gold price, following a $654 million Canadian initial capital expenditure. A lot of political risk news this week. SQM shareholders think that SQM shareholders and Albemarle shareholders thought the worst of Chile's lithium plans, as country president Gabriel Boric said he would nationalize the lithium sector, but it appears to be a nationalization with a small n. Boric said the government would respect existing contracts with SQM and Albemarle, but would like them, to negotiate contracts with the state in which the state would have majority ownership. The idea has yet to be made into law, but it gives SQM in particular a dilemma, given that its current contract expires in 2030. I think we'll be talking a bit more about this in a moment. Boric's idea could be watered down by Congress, as his mining royalty plan is, and it is also happening in Mexico, where efforts by President Andres Manuel Lopez Obrador to reform the mining law and cut the length of mining concession has faced resistance. AMLO had sought to reduce the maximum concession term from 100 years to 30, but his aim to fast-track the legislation backfired as the Chamber of Deputies pushed back and modified his bill and changed the maximum term to 80 years. Coincidentally, a study by the US policy think tank, the Wilson Center, this week suggests the future of lithium mining in South America is uncertain due to potential environmental and local economic risks, warning that opposition may limit its development if communities block projects or if private operators refrain from investing due to the perception of high risk. Is political risk easing in the US? Perpetual Resources thinks so. It's looking to be able to make a construction decision for its Stibnite Gold and Antimony project in Idaho in late 2024, with CEO Laura Sayer saying the permitting progress is, quote, progressing well, unquote, with federal agencies, which recognize its development plan as their preferred environmental option. The company is also receiving Department of Defense funding under the Defense Production Act, with the company confident it can produce the antimony trisulfite the military wants for munitions. Even Northern Dynasty Minerals is getting some love for its controversial Pebble project in Alaska, where the U.S. Army Corps of Engineers Pacific Ocean Division accepted Pebble's position that the process for the record of decision for the project was not properly followed. It remanded the matter back to the United States Army Corps of Engineers Alaska District Office to re-evaluate specific issues.
William, I'd like to bring you back in. As Paul noted last Friday, that we did have the news regarding the nationalization, small n, as Paul notes, with future lithium contracts. Can you bring us up to date? What has been the shakeout right now? So I noted, for instance, Albemarle really took a hit, hitting a 52-week low on the news. Really hasn't recovered that much, I would say. Do we have clarity on what's proposed, William?
No, I don't think we do. I don't think anybody really has much clarity about it. I think potentially a massive change. I think, as Paul mentioned, the current contracts aren't, are ring fenced to some extent. So that should mean that Albemarle and SQM can continue. But I think the problem, all these negotiations are going to take a long time. That creates a lot of doubt as well then. And I think, it's going to take a long time before we get clarity. In the meantime, I think the danger is that sort of threatens further investment in Chile on the lithium side. Which given the speed which the whole sort of lithium ion battery and the EV and energy storage system market is moving, the last thing we need is further sort of hurdles in the way for new production coming on stream.
I was at the World Copper Conference in Santiago, Chile last week, and obviously the political situation was a key talking point there. And the government's in a very tough position, particularly with its more left-wing supporters. So last week, one of the big news stories, apart from the Boric's announcement about lithium, was the government awarded the environmental license to Anglo American's Los Bronces mine life extension project. The government held the line that this was a technical decision because the project meets all the requirements. This was quite an unpopular decision amongst the more left-wing environmental activist elements of the government. So perhaps this announcement about lithium is some kind of show of force by the government that it isn't in bed with the mining sector per se. Also very noticeable, nobody from the government attended the famous CESCO dinner in the midweek, which is quite unusual. Usually the mining minister's always there, and most years, last year, for example, the president of the country is there. So the government's trying to send some political signals, even though it's having to a certain extent, toe the line with mining and follow due process and respect institutions. So I think this is another instance of the government sort of showing that it's not really in bed, it's not completely in bed with the mining sector, although it recognises it's a critically important sector for the country.
Question for both of you. I want to start with Paul, but kind of stepping back from, looking at all of Latin America. Paul, you noted the nationalization in Mexico, and then also that announcement that we had from Chile. You're in Colombia, and there also has been some tightening regulations there as well, too. Is there a political shift? Is there a move towards nationalization? We'll note that the all-important lithium triangle, it borders Bolivia, Chile, and then there's also Argentina. And it seems like when I'm talking to a lot of the people that are looking at developments within the Argentina side, they're always talking about how friendly a mining jurisdiction is, how much of a friendly mining jurisdiction is. Is there a swell towards nationalization in Latin America, Paul?
You've got a number of leftist governments in power. And for better or worse, the leftist governments typically bring with them the baggage from the 1960s of the Marxist import substitution model. So, for example, in Chile, they're still talking about the idea of building new copper smelters to add to export more value-added products. There's similar arguments or debates going on in Colombia. So in all countries, the state already owns the underlying resources. This is enshrined in their law. So to sort of nationalize is in some ways a bit of a misnomer because they already own the resources. So it seems there's, again, some mixed signals. The lithium industry in Mexico is at a very, very infant stage. So you could argue there's nothing to nationalize there yet. Chile's making some noises, but it's already got a very established industry there. It could be bigger, should be bigger, but hasn't because of government interference. As Boric said, he will respect existing contracts, which means in all reality, by the time 2030 comes around, we're going to be 2 governments down the line. So maybe a future Chilean government will not proceed with this. Boric's comments still have to be made into law. And that's by far from certain that will happen. His plan to change the royalty regime in Chile has met a lot of resistance and keeps being watered back. Last week, for example, the start of the week, the total ceiling on the government take was around 50%. But by the end of the week, it'd been negotiated down to a maximum of 47%. And he still hasn't got his bill across the line yet.
William, stepping back, looking at the larger lithium space all in Latin America, and also maybe if you could talk about if there's been any impact upon if people are seeing that investment is getting squeezed or getting uncertain in Latin America. Have we seen that there's been any uptake in investment in, say, other jurisdictions like Australia and Canada?
Yeah, I think the situation certainly in sort of Chile has made investors look elsewhere, and we've seen that even with Albemarle and SQM in Chile, investing in operations in Australia in a big way. So yeah, we're probably going to see more of that. I think certainly as there is more there's misunderstanding, or not misunderstanding, it's just not very clear at the moment of the situation. But I think, going back to what Paul was saying, if the Chilean state does take sort of control, you have got sort of big, the Chilean miner Codelco, they're, at least it's not a sort of a nationalization with totally new entities running it. You've got miners there who've, had a very long history and, keeping copper production, it's been the major copper producer in the world. So, it could be worse. I think, at least if sort of the likes of Codelco are involved in it, then at least they have they've got a long history in mining.
I think while that's true, I would sort of push back on a couple of aspects there. Codelco is finding it very, very tough to finance its own copper expansion and development program. So how it will be able to finance developments in lithium is a big question mark. And also the fact is that lithium's a specialty chemical. It's not a metal commodity. And Codelco really doesn't have that kind of knowledge or expertise. So presumably, if this does progress, the companies such as SQM or Albemarle will remain operators even if they don't have majority ownership.
Yeah, I'd agree. I think that's, I think that would be the way forward. As you say, there's a lot of know-how tied up in SQM and Albemarle. They've been doing it. They are the incumbent producers, certainly on the brine side of things. So, there's a lot of value in those companies from a purely know-how basis. So, yeah, I would imagine that sort of these would be partnerships with these entities.
William, why was there a sharp drop in lithium prices this year?
Well, there was a massive rise, should we say, from the fourth quarter 2020 to November 2022 in say, if we're looking at lithium. So, lithium carbonate in China was up over 1,000% from the lows in 2020 to the highs in November last year. Prices, I think, when prices are seeing sustained rise week after week, I think you have the consumers need to hold on to stock. So they because they know prices are going to be higher next week. So, I think there was a fair degree of sort of stock within the system. But what was happening is, and it's quite well telegraphed, that a lot of new production was coming on stream from the sort of mainstream producers. So you've seen the sort of the increases in capacity expansions at SQM. You've seen some at Albemarle. In Australia, you saw 2 out of 3 plants at Wodgina started up last year. You had Pilbara Minerals starting up the old Altura operation. You also had Core Lithium sort of about to come on stream. And you had last year Mineral Resources announced that they would double capacity as well by the end of the year. So, it was quite well telegraphed that new supply was coming on stream. But I think the real sort of turning point was probably because the profit margins were so large that it did sort of end up sucking lithium units out of the woodwork. So, you started to see DSO, so direct shipment of ore, coming from Africa for the first time to China. You saw more DSO shipments from Australia coming into China. You saw even sort of the reprocessing of tailings as well. So I think all that just, the high prices just attracted a lot of lithium units into the converters in China, and that started to to switch the market from being tight to a sort of a slight oversupply situation. And in that situation, if you are holding stocks and then price starts to fall, especially given such extreme price moves, then the market starts to destock, and that's what we've seen. We've seen a very sort of aggressive destocking move, I think. I should also say on the demand side also has been weaker than expected, and that's had an impact as well, I think. So you've seen, some of the processors cutting back utilization rates to maybe 40% on some of the sort of cathode manufacturers and things.
Paul?
While we're talking about pricing for lithium, I think it's also very worthwhile noting that last year, SQM paid about $5 billion in all kinds of taxes to the Chilean government, whilst Codelco, its payments to the government were about $2 billion. So this could also be a key driver behind Gabriel Boric's comments about nationalizing the sector.
William, talking again, where are we again with supply-demand economics? Because, the theme that is always coming out of the battery metal space is that we're just not going to be able to produce enough lithium. We're not going to be able to produce enough lithium. There's going to be a real problem for all these car makers with just the quick adoption with EV. You seem to be saying right now that our needs are being met. You also had a report in Fastmarkets saying that they were looking at tightness lasting until 2026. I'm just interested in, where all the supply is coming from.
There is. I mean, we have. What I'd say is, like we saw in 2018, when you suddenly get a bunch of new producers coming on stream, you've had another sort of similar sort of situation now. So I think we've just switched temporarily into a sort of a bit of a surplus situation. A lot of the extra material, like the DSO material, will be very price elastic. That will turn off. We also saw Chinese sort of ramp up their lepidolite production. That's probably still that's still probably economically viable. Some of it is anyway. Some we have heard that some of the sort of production has been curtailed on that side, so that will start to tighten the market up again. And some of the mainstream expansions and restarts and new capacity that's come on stream or was planning to come on stream, some of that has been delayed. So we've seen delays at Core Lithium, we've seen delays at Mineral Resources. We've got small delays at Livent even as well. So I think that's a factor of sort of the lithium market. It does take longer than expected to bring on new supply, but I think there are a lot of possible and probable operations in the pipeline. We're looking at, we've got about 51 sort of operations in existence at the moment, 25 probables we're sort of monitoring. We've got about 40 odd possibles, and then there are over 220 other projects, more speculative ones, or at the sort of exploration stage as well. So there's no shortage of lithium companies and assets out there. The main issue is how long it takes to bring those assets into operation. So if you look at Thacker Pass in the States, that's 15 years probably in the making. It takes a long time. Obviously, in places like China, you have, and even Australia, they've been able to bring on new supply quicker than that. But a lot of, especially if we're looking at Europe and the US, then it does tend to take a long time.
Is any of this non-mainstream supply looking, how would you say, meaningful, William? Would be viable. So I would think it'd be instance like people that are looking at DLE and then getting lithium out of, say, old oil wells or something like that.
Yeah, no, I think, in our long-term forecast, we're certainly expecting DLE later on in the sort of decade to come, to be an important part of production. I think it ticks ESG boxes as well. I think a lot of the projects, will come on stream. But the main thing is whether they come on stream in a timely manner. And we generally think sort of the market's going to be tight. It's not just about sort of, how much, demand is there for actual consumption of EVs. As the whole of this sort of, EV, electric battery, lithium-ion battery era unfolds, it's growing so fast that, every new factory needs working stock added to it as well. So it's a much bigger, it's not just the sort of, you don't just need to produce enough lithium to put into the new cars coming off the end of the line. You need to increase working stock as well. Another area, I suppose, we should on the supply side, which later on will be recycling as well, which will be important.
William, what do you pay attention to when you're assessing lithium prices? I mean, gold is pretty easy for us. There's a spot price, and if you want to get fancy, there's a future price. But if I go to your Fastmarkets site, I'm going to see a price for lithium hydroxide, lithium carbonate, spodumene. What's it all mean, and how do you interpret it, William?
Yeah. So it is complicated. You've got spodumene, you've got lithium carbonate, you've got hydroxide. You've also got technical and industrial grade carbonate and in technical industrial grade hydroxide as well. So there are a lot of different sort of price series that we're following. We're looking at prices in different regions as well. So we're looking at ex-works China prices. We're looking at CIF, China, Japan, Korea prices, and then EU and US prices as well. They are all related. The trend tends to be that the China lithium carbonate price sets the trend. The CIF prices and hydroxide tends to follow that. The CIF prices then tend to be sort of the next ones to react in the same direction as the Chinese prices have moved, and then the sort of European and US follow as well. And that's down to sort of liquidity issues. The Chinese market is much more sort of spot orientated, which is what sort of like the Fastmarkets prices look at from a PRA point of view. Whereas some of the sort of the CIF market tends to be more on sort of long-term contracts, but that tends to be price based to say sort of an index price. But there's less spot activity. Excuse me.
So I guess it would depend then where the company is particularly located, if it's a North American company or if it's like a Pilbara or something like that has got exports directly into. So then it depends on, you're looking at what part of the chain that they're in. Sorry, Paul, you have something you want to add?
No, I was just going to ask a question just out of curiosity. China in its process of unlinking from the Western world is looking to do increasing amount of business in one denominated contracts. Is that something you're seeing in the lithium space?
So China pricing tends to be they're looking at their Chinese sort of price reporting agency prices at the moment. Western markets, Western companies are tending to sort of look at Western PRA prices such as Fastmarkets. And then we've also got sort of early stages of some of the futures markets as well. So CME, LME, and SGX exchanges are also sort of got listed lithium contracts. So I think we're going to see more consolidation and more consolidation. Like we have a copper price. It's either a CME or a LME copper price will become the benchmark. For the lithium prices, lots of people have used different sort of pricing indexes or different pricing structures, shall I say? But I think we're going to see consolidation in that. but it might be that for the Chinese market, it might be slightly separate for the sort of the ex-Chinese market. To answer your question, Paul, I'm not sure.
Well, I was really getting at, are contracts being denominated in yuan or in US dollars?
Oh, sorry, right. Yeah, I'd say in both at the moment. I'd say, people dealing with China will, if you're selling into China, or if you're dealing within China, then you are yuan. But I think Western companies are tending to be US dollar based.
William, Chinese markets are important for gold, they're important for copper, but for lithium, it seems to be especially so. Why is the lithium market revolve around the China market?
I think mainly because China's had a 10 to 15 year lead. They got into electric vehicles much earlier. They've developed the lithium sort of processing for the battery grade lithium carbonate, lithium hydroxide. They've been the ones who have been sort of taking in raw materials from South America and Australia. So they have a huge advantage in, they've been doing it a lot longer. And I think that's, they are the epicenter of lithium processing, not obviously of raw materials. But that's all beginning to change. I think on the one hand, we are seeing, more lithium resources being extracted within China, especially from the lepidolite. But we're also seeing sort of the processing such is sort of shifting as well. So while China will remain sort of dominant at the moment, we're seeing lithium conversion plants in Europe being built or being planned, and same as in North America as well. So the epicenter is shifting, but at the moment, China has that lead.
Now, William, help us parse headlines and news. It seems like every day there's going to be some headline about some type of tech that is going to upend the battery industry. I note that CATL was talking about sodium-ion batteries, for instance, which made a lot of headlines. They also announced their condensed battery, which is going to double energy intensity. How do you interpret this news? Do you pay attention to it at all? Or is it something that you're just kind of waiting until you can see if it actually can get to production?
Yeah, that is interesting. I don't think you can ignore it. I don't think you can ignore something like sodium ion. I mean, we're going to start looking at sodium ion, how much that might take from lithium ion batteries. I think there are lots of different, battery chemistries, whether you're looking at LFP or NCM batteries. I think these different battery chemistries will develop. I think they will have, each battery chemistry will sort of find its own niche and will be used for sort of particular applications, and will be suited for particular applications. So I think we will see. I think there's room. It's a big, as I said earlier, it's a marketplace which is getting very big, and it's in a hurry. So I think there's need for different sort of chemistries. I think also, the battery is the most expensive part of the car if you're looking at EVs. So it's understandable that people are striving to either make batteries cheaper or make them more energy density, so that they can sort of start reducing some of those costs as well. And there are big sort of they're absorbing a lot of raw materials. So if you can make things more efficiently, then that will be good as well.
Lastly, William, what are some key developments in the battery metal space that you're keeping an eye on over the next 12 months?
Yeah, I think the recovery in sort of Chinese demand will be key. I think apparent demand looks weak because there's been a lot of destocking. I think it will pick up. We are seeing, although EV numbers, if you look at some data, have picked up again in February and March, there is quite a lot of inventory at dealerships of EVs, so we need to see that move down. The other thing is what sort of delays are we going to see to new production coming on stream? Is that going to be an ongoing issue? We're hearing of sort of parts shortages for some sort of critical mining machines and parts of the sort of the mining process. So I think we need to be aware of that. These are all sort of hurdles which are going to sort of get in the way of sort of the producers' ability to sort of supply enough material in a timely manner.
Let's turn to our number of the week. The guest goes first. William, what's your number?
My number's 20. So 20, why 20? Because I'm looking at, our long-term forecast for demand for lithium is looking at sort of 20 compound average growth rate each year, 20% compound average growth rate each year going out to over the next 10 years. And that is an extremely hard measure or task for producers to keep up with, seeing 20% growth year after year.
Paul, what's your number?
My number, Michael, is 13. 13% to be more precise. It seems that costs in the gold sector are coming down. Eldorado Gold reported an all-in sustaining cost 5% down, lower 5% down on the previous quarter. Agnico Eagle reported 9% down in the December quarter, but Newmont's was 13% up. Although it said it guided its production was skewed to the second half of the year.
Thank you, Paul. I was having some anxiety if we were going to get in Newmont's quarter. I'm glad that you saved us at the end of the podcast here. So my number, keeping with the lithium theme, is 75. That's 75 years. It was 75 years ago that 7-Up decided to discontinue the use of lithium citrate, a mood stabilizing drug, in its concoction. That's it for us. William, Fastmarkets is going to have an event coming to Las Vegas at the end of June. What is it?
Yeah, we have the Lithium Supply and Battery Materials Conference in Las Vegas on the 21st of June. Before that, though, next week on May 1st or 3rd, we're in Singapore as well with the Asian Battery Materials Conference.
Follow me at Michael McCrae. That's McCrae with 2 C's on Twitter. Paul is at Paul Harris Gold. William, how can people get a hold of you?
William Adams at fastmarkets.com.
If you like what you hear, tell a friend. Don't forget to subscribe. On behalf of William Adams, Michael McCrae, and Paul Harris, have a pleasant weekend.